Three, two, one. Hello and welcome to YQL Real Talk, your monthly real estate digest so you can keep up to date with our local real estate and economy. Your host, like always, is Kurtis Hawkins, and today I have a special guest, Dillan Kelly from Dominion Lending Center. I think I said that right.
Yep.
Best mortgage broker in Canada.
Hey, bang! There you go.
So today we kind of wanted to go over interest rates. So interest rates have been coming down over the past, 6 months.
6 months, really a year when
Yeah.
we look at the first Bank of Canada rate drop. So
when I hear that, or when people hear that, lots of times they think, oh, interest rates came down with the Bank of Canada. Mortgage rates must be going down too. So
yes.
some of that's correct. Some of that's not really correct.
Yeah, there's
Correct,
a little
correct?
bit. Yeah, that's correct. There's a little bit of confusion in the market because there's all these different names and different rates. So some of them get pushed by the media a little bit more. So for example, the overnight lending rate. So that's the Bank of Canada's policy rate. So really that's what they're, dropping or increasing at these different meetings. Mm-hmm. But the rate of 3.25% now as of, Wednesday, means a lot less to mortgage rates, especially fixed rates, than the media maybe pushes. Variable rates, absolutely, that helps for variable rate holders. But the fixed rate market is based off primarily the bond rate market, which is different, not tied to the Bank of Canada, not tied to the prime lending rate, which is what the variable rates are actually based off of.
Okay.
So there's all these different measurements for rates right now.
So long story short, when bonds go down, your fixed rates start to go down?
Yes, yeah. So typically, as far as where lenders get their money to lend out for mortgages, you have deposits, you have bond rates, you have investors, and then the fourth source is the Bank of Canada. It's called the overnight lending rate. Pretty much it's what banks can get overnight if they need quick money, emergency funds, you name it. The longer, fixed terms that you see for mortgages, typically deposit or bond rate dependent.
So what's a better indicator then, besides the Bank of Canada rate, to predict what, or to predict what fixed rates are going to be?
The bond rate market. So to give you an example, we've seen 2 half-point cuts in a row here. Mm-hmm. But actually the fixed rates in the bond market were lower in September before these rate cuts than they are today. The bond market, where the 5-year yield is today, it's around 2.9, close to 3%. So that's, what a lender can really lend a 5-year fixed, to kind of just make it simple. What is costing them for a 5-year fixed? It'd be close to 3% to lend. And obviously they need a margin, need to make money. Typically what we see is that, the banks want to make about 1.5% based off wherever the bond market is. So as of today, fixed rate should be closer to 4.4-ish%, where they're actually lower than that. So their margins are less than, they typically would be.
Yep.
Just
so why I've heard stuff on YouTube specifically that there's a mortgage rate war right now. Is that it?
Yeah, it's a lot more aggressive. It's probably the most aggressive I've seen in my, nearly 10 years in the industry, especially for those people that have mortgage renewals coming up, because it's getting harder and harder to generate new business for the banks, because there is so much competition. So they don't want to lose, what they already have. So when your mortgage up for renewal, that's what I'm really seeing. They don't want to see their clients leave because it's the cheapest client to keep since they're.
I think they're being babies. There's only 5 big banks.
Yeah, and I seen today. Well, if you count National Bank, there's 6 big banks, and they hold 97% of I think
and they're
of
whining
the
about
$9
it.
trillion in banking, and they're really fighting for it. So more than ever, the banks are coming in more competitive, which is actually really good for the consumer.
Yep.
For a mortgage broker, we have to find you the best interest rate, as well as does this product fit your needs. So interest rate's super important, and the banks are competitive right now in that space. But advice and product wise, they're still not as competitive.
Yeah, there's still a lot more to a mortgage than just interest rate.
Yes.
Like a lot more.
Yeah, exactly.
Depending on if it's a rental, how long you're going to keep it for, et cetera, et cetera. Like there's so many different variables. Are you going to end up breaking it and pay more? Like, should you do a variable? Should you do fixed? Like is the first question, and then goes on and on from there.
Yeah.
So another thing I've heard is that in 2025 coming up here, like 80% of mortgages are up for renewal.
Yeah, there's about 300 billion in dollars, like mortgage dollars, up for renewal
In Canada?
In Canada. I don't know if it's as high as 80%, but it's the most ever for the renewals. And these people are, unless they're in a variable rate, they've kind of seen what the market's played out. Typically, they kind of have budgeted what the market's done. But you have people coming from, 2020 rates where we're around 2%.
Yep.
There's going to be some payment shock, and it does, take a toll on the consumer.
Well, I like what I've said to like previously on other podcasts, like the last market update we just did. I was talking about how going from let's say you bought in 2020 and you're like a high 1%, low to 1% mortgage rate holder right now, and now it's about to go to 4.5%, like you just said. Imagine if the Bank of Canada didn't drop rates and they were still up at like 7% or 6%. Like that wasn't that long ago when they were up there. Yeah. So I have a conspiracy that, not a conspiracy, I'm sure that they've thought of this too, but another contributing factor as to why they dropped interest rates around this time is they're probably seeing that most of the mortgages are coming up for renewal in 2025.
Yeah, well, you're seeing, housing costs and the inflation reports being up, and that's, mainly because if it's not the mortgage holder that's paying a higher mortgage payment now, it's the renter that's paying a higher, rental payment because, the landlord has to I'm seeing less people leaving cash flow, just, pay the bills and have a fair deal for the tenant. Of course, there's, property types and different things that the landlord's still making out pretty good. But in order to make it make sense for landlords to hold property, the rental payments have to go up, which then goes into inflation. And then when we look at inflation reports and then the unemployment rising in Canada, the Bank of Canada made a lot of sense for them to drop interest rates.
Yeah. So. And you think that had something to do with it? Is that there's a bunch of mortgages coming up for renewal?
It doesn't hurt knowing that's on the horizon. Wouldn't be the sole reason, or it wouldn't be like a political push per se.
No, but I think that if they didn't, the shit would really hit the fan if they didn't at this time, right? So like you can't tell me that they didn't think about this and go, wait, inflation's down. So yes, we're probably okay to reduce interest rates a little bit, but dropping to, I know unemployment's been up, so they dropped that. They were expected to do like a 0.5% drop. It went to 5% or 0.5%. I think some of that has to do with a bunch of, and they've never said it, but there has to be a part of them that's like, we got a bunch of mortgage renewals coming up. Like I've said this before, if you're in BC and Ontario, you bought a home in 2020, competing offers, you had to bid $100,000 over ask, and your mortgage rate is 2%, and you're like, sweet, this is as cheap as it's ever going to get. And now it goes to 4%. Like in Lethbridge, Brett just did this to his house. His house is about $450 or something. When he went to renew, his mortgage payment almost doubled.
Ouch.
So in Lethbridge, like let's say it was $1,500, now it's $3,000. Like that sucks. That's an extra $1,500.
Yeah. Probably
Probably manageable for some people. Like it is manageable. Like if you got two incomes, like you'll figure it out. In BC, if your home was $1 million and it's not, if it doubles your mortgage payment going from 9 to like 18,000, like nobody can swallow that. And that's like, could be a huge crush to the market out there for sure.
Yeah. I seen CMHC did a report talking about how many renewals were coming up in 2025 and kind of generalizing it. They figure about, your payment will go up about 30% if you took in 2020 to 2025,
right?
Comparing fixed rates.
Yeah. So it's a lot better than double. But.
Yeah. So of course, if you're looking at a $300,000 mortgage versus a $2 million mortgage, it's going to make a big difference. And
I get a lot of comments that I'm waiting for the crash. I'm waiting for the crash to happen. Yeah. Well, in Lethbridge, again, buying our average house is around $380.
Sure.
So if your mortgage payment's going up 30% on a $380 mortgage, you're probably only mortgaging like $350 or something.
Sure.
It's manageable. Like we're not going to see a bunch of foreclosures.
Yeah.
Maybe they'll tick up a bit, but we're not going to see a ton. But where you'll see them, I think, is Ontario, BC, and they have ticked up a little bit already. Very minimally, but they are up a little bit in those big centers.
Yeah, and in Alberta, especially in southern Alberta, the price is the value of your home more likely than not for most property types has jumped up a ton. So what I'm seeing a lot is even if the payment doesn't seem manageable, you have all sorts of equity sitting in your property. People are leaning on those refinances, pulling money out, stretching that amortization out, paying off other debt, and kind of starting back, square one to get into a manageable position.
You sound like a mortgage broker.
Yes, exactly. Just plug in refinances.
Yeah. So I don't know, with interest rates coming down, that's going to help out everybody pretty much. I think like it's a good thing that they're coming down.
Yeah.
Do you agree?
Yeah. Yeah.
And then with all these renewals coming up, like, do you see more people wanting to potentially sell if their mortgage payments are too high, or are they? I've talked to you a little bit, and I've talked to just on the phone with a lawyer, and he said coming up to Christmas here, they're doing a ton of refinances. So I'm wondering if we're not right now. Lethbridge is at like historically low inventory. I just looked today. There's like 180 homes without an offer that are detached in Lethbridge. That's the lowest it's ever been. Wow. So it's always low around this time of year, but this is extremely low.
Yeah.
So moving into next year, like I keep trying to predict, are we going to see more listings because all these mortgage renewals are coming up, or are people just going to continue to refinance? So what do you think?
I think people are going to lean on the refinances quite a bit going into the new year. I don't think there's going to be this, crazy amount of inventory that doubles on the market. I think for sure there's going to be situations where people say, you know what, this isn't going to be manageable. Let's put it on the market. Feels like a decent time to sell because there's tons of buyers just waiting for homes in their price point to get on the market there. So definitely not a bad time to sell if you're in that position. You're not in a position of weakness, which is good for them. But I don't think there's going to be a flood of listings. So if people are waiting, saying, hey, you know what, I'm going to wait for interest rates to drop and I'm going to wait for inventory to go up. I don't think it's going to be dramatic either way for the interest side as well as the inventory side. So, I look at homes. For a lot of people, not everybody wants to buy it as an investment. They don't want to buy it as a rental property. They're buying the house to live in. And if they see themselves in the house long term, what they're paying today and what, it's going to be worth 20 years down the road, there's going to be fluctuations in prices and values. So if people are in it for the long term for the house, they'll figure out how to make the mortgage work. Canada's kind of funny where, typically a 5-year term is standard. Where in the States, you see 15, 30-year mortgages where you can budget a lot better, which I actually prefer that system. Me too. More.
Like, I don't know if people are aware of this. Like Dillan just said, in Canada, your rate, if you get a rate locked in today at 4.29, that's what your rate's going to be for 5 years. And then when it's up for renewal and you got to get whatever the new rate is. Like you don't really have a choice. In the States, when you get your mortgage at 2%, you can get that mortgage rate until like the life of the loan is up, not a fixed term. So like for 30 years, if you're amortizing it for 30 years, your interest rate's going to be 2% the entire time. Yeah. Which is crazy. I wish we had that here. That'd make it so much easier. Well, then and do you know why? Budget. Do you know why they don't?
Truthfully, I wouldn't be able to give an accurate answer, but I do much prefer people being able to budget long term. Yeah. Because, if inflation goes up and all these different things happen in Canada, you would know what your payment is on the loan that you're signing for 25, 30 years, whatever it is, where you don't have that luxury in Canada. You have to renegotiate. And if something happens financially where you take a credit hit in the short term, lenders are going to take advantage of you because they typically re-pull credit at your renewal time.
I thought they don't have to anymore. I thought I heard that. That renewal, there was a new rule that came out that said they don't have to pull your credit if you're just renewing.
That would be pretty recent because whenever...
Or maybe it was job... I don't know. I thought there was something...
Typically not job verification. Typically they'll offer the renewal notice and they'll have the renewal offers and you can just sign. You don't have to reapply. You don't have to give job information. Okay. So that's true. But as far as... all the commitments that we send out through our lenders, right in the fine print says they can re-pull credit when it comes for renewal. And what I'm seeing is if somebody's take a huge credit hit and when they first applied for the loan, their credit was 700, now it's 550. The lender knows that they can't really move to another A-lending solution and they're offering a much higher rate. I know one lender in particular that I always know whenever when the renewal offer right now, it's like they're offering 6% where they're offering other clients 4.19%. And it's pretty obvious because when we pull credit, we see that they've taken a big credit hit and, they're in it to make money. And
So I guess it's a good tip is keep your credit clean, especially around renewal time.
exactly.
Yeah. There was another thing I was going to ask you about interest rates, new inventory. I don't remember now. Now I'm going to have to edit this because I can't remember what I was going to say. Anything else?
I would say.
That's what it was. So renewals are coming up. If my stats are right, you said they're not going to be this high, but if 80% of people are watching right now have a mortgage renewal coming up next year, fixed or variable?
So it's so situational. Truthfully, as I sit here today, where fixed rates are at and where variable rates are at and what the projections are.
I guess what are variable rates at ish right now? If
So
your average rate is at
so really-
4.29 for fixed?
Yeah, let's call it 4.29 for fixed. There's certainly lower out there. And let's say the average variable is prime minus 0.9. And again, there's going to be better out there for sure. But if we're comparing 4.29 and then prime minus 0.9,
Which is?
that's going to be 4.55%, my quick math says.
So right now it's going to be more expensive to go variable, which is typically not the case.
But the last little bit, it definitely has been because they've been kind of projecting.
Well, it wasn't when I got my last mortgage at variable.
Yeah, same here. So if we're comparing and saying fixed is 0.3, 0.4%, cheaper than variable, the variable product, not to jump into it, is typically a better product than a fixed. There's more flexibility as far as paying it down, payout penalties, but that aside, just the interest rate. What some economists that I trust are projecting is that the Bank of Canada will drop, in the first half of the year, 0.5 to 0.75% more, which will, more than catch up the difference in fixed and variable. So if you have a little bit of risk tolerance, I think the savings there is there for the variable rate. On top, it's a better product. The kind of the nuts and bolts of the product. It's typically a better product as well. So I would lean variable. But if someone's super budget conscious, things are tight, they just want to get a fair deal and they're happy with the payment, fixed, absolutely. We're still doing more fixed than variable because more people are in that camp.
And we just saw rates spike up like crazy, so everyone gets freaked out about variable. Which is fine.
And there's absolutely nothing to say that they won't spike again. But right now, the projections. Variable is going to definitely jump down the first 6 months of 2025. Wait and see after that. They're probably going to hold for a long time. The consensus is fixed rates, if they're, a really good fixed rate right now is right around 4% flat, let's call it. In the next 3-4 years, what I've seen economists projecting is closer, to 3.6 being the lowest fixed rate. So people that are, I'll wait till
we're pretty much at the bottom.
Close to the bottom on fixed rates. We're not quite there, but very, very close. And people, and I even fell for this a little bit where, okay, they're not going to jump down to 2% flat, but why don't they, there must be a path for them to go to 2.89 or 2.99. And, I heard this from mortgage brokers, real estate agents, bankers, kind of projecting rates down the line. Oh, let's take a 3-year fix because rates are going to be X at this time. But really all the data that we've seen doesn't suggest that at all. It shows that we're going to see rates drop a little bit more, not a crazy amount. Same thing with the variable. We're probably going to see total 0.75, maybe a full % in this rate cycle, and then wait and see what happens down the road, of course.
Is your mortgage variable or fixed?
I'm variable. Yeah.
And?
I'll stay variable for my whole life.
How come?
Historically, and mind you, I don't have the data over this whole COVID thing, but historically before COVID, variable, I believe in a 25-year period, won the majority of the time. And I'm talking, 3/4 or more of the time. And I just like the flexibility. Again, it's not just about rate. And if you have, the luxury that you can, take a little bit of a payment hit if things go awry, I do still believe in the product. We're going to see some pretty nasty payout penalties, I feel, down the road here, that people that got stuck taking fixed around 6% that are paying out midterm. Where in the variable, with a variable rate, it'd be 3 months interest typically, which would be a fraction of the payout penalty. So just that alone, having the flexibility for life happens and, being flexible, I like the variable.
Yeah. I have fixed on, I got 4 properties. I fixed on 3 of them and 1 is variable and it's killing me right now. And I did the variable because there is stats out there that if you, depending on when you buy the house, there's like a really good chance that if you hold variable throughout the whole entire life of the mortgage, it's going to be cheaper than fixed.
Yep.
But you have to be able to ride it out, and it sucks right now.
Yeah,
But it's coming down, so that's good.
Yeah, it hurts. And what I will say, again, it is very situational. I actually prefer fixed on rental properties a lot of the time, just because, again, knowing that budgeting, you want to treat it, what do I need to cash flow when you're budgeting those numbers, which obviously with a variable with the ups and downs is tougher to budget.
Yep.
So again, it depends on the situation.
I will say that this is one of the, I don't care if my clients use a bank or a mortgage broker. I use a mortgage broker now. Before I was a real estate agent, I just went to the bank because I was like, well, they're the bank. They got to know best. They're like the biggest in the country. And I didn't get any advice on, well, is this a rental property? Why do you want to go variable on a rental property? Like, don't you want your payments fixed so that you can just budget out everything properly? And I had the thought at the time, and I'm like, no, it's going to be cheaper long term, which it still is. So I didn't go wrong, but I never had that sort of like advice from somebody being like, well, what's the best option? Like, why would I go variable over fixed other than just the rate?
Yeah.
Right. So in that case, it's like you said, it's a more flexible product. But I'm not selling the rental ever.
Exactly. You're looking at it as an investment and not a family home, obviously.
Yeah.
So you don't have that, connection to it where you could say, you know what, we need a downsize, upsize, we need to move for whatever reason, right?
So I don't really need the flexibility. So maybe it would have been better at the time to take a 2%, 2.5% tenure. I don't know.
Yeah.
But
obviously realtors.
This is the advice that I think that you do give as a mortgage broker, whereas oftentimes, I'm not saying every bank is like this.
Yep.
Oftentimes with the bank, it's here's what we can do, and there's like not a lot of advice going to it. So
Yeah.
I don't know.
Yeah,
It's been my experience. Anyway.
There's great bankers. There's also bankers that are heavily bonused based off cross-selling too. So they're just worried about moving on to the next product.
Yeah, well, there's bad mortgage brokers too, Dylan.
There is. There really is.
Yeah. But yeah, anyway, I think that's it. Is there anything else about interest rates people need to keep in mind?
Well, there is a pretty big mortgage change happening December 15th here.
2 days.
2 days.
Sunday?
Sunday. Maybe it's the 16th. But insured mortgages, we're now going to be able to go up to 30-year amortizations. Not only
So
on
that's if you're putting 5% down.
correct,
Or less than 20.
less than 20% down.
Yeah.
So on new builds or for first-time home buyers, that increases buying power by about 7-8%. Of course, you're going to be paying a boatload more interest, about 20-25% more interest over the life.
I hated this rule when it comes out, and I still do.
Yep.
Because the whole idea of it and how it was pitched, it's going to help some people.
Yep.
That many people in the scheme of things. But it was pitched as we're trying to make housing more affordable. So let's stretch out your amortization. Only, what was it, on new builds and pre-construction?
Initially, yes.
Yeah. So who in Lethbridge, maybe you can afford a new build for your first time home.
Yeah.
Maybe. Still pretty tough. If you're in BC and Ontario trying to buy a new build as your first home, fantastic that you can stretch it out to 30 years. That's not going to help very many people.
Yeah. Yeah.
It drives me nuts.
Yeah, they're throwing stuff at the wall and seeing what sticks, but I think there will be that niche pocket of people that it will help. There's also a rule change coming that properties up to 1.5 million can now be insured. Again, Southern Alberta, what's the percentage of homes that even hit that threshold, or you could count on a couple hands really in Lethbridge.
And that's for anybody, not first-time home buyers, right?
correct.
Yeah.
Yes. Yeah.
So I think there was a calculation I saw that if you were buying like a $1.5 million home, that your down payment, what is that?
It's 5% on the first, 500,000, 10% on the balance.
Yeah. Is there something with the down payment coming down too? There was something that I saw that was like, here's your cash before, here's your cash after the new rules.
Yeah.
I can't remember that, but.
So honestly, I can't remember either, just because I haven't been focusing on the 1.5 million. I've yet to have somebody, really want to look at 1.5, and the small number of people that have bought in that price range of my clientele, they always have pretty hefty down payments because the CMHC fee is just bonkers on that kind of dollars.
I was going to search it up here. See how many 1.5s sold in Lethbridge in the last year.
Yeah.
Give me 1 sec. Sold 365. I just want to bring it up because this is why we're like, I don't know. It doesn't happen very often.
And I bet you 80% of those had over 20% down payments. Like it,
Oh yeah.
It wouldn't have been appealing.
It's not going to help
down
them
less. Yeah.
No. So in the last year, over 1.5, there's been one that is sold.
Yeah.
So there you go.
Great rule, Justin.
Yeah. I think that's it. I just wanted to pick your brain about mortgage rates and what this change in the Bank of Canada dropping their key interest rate down, how that actually affects us. Because I think it hits the news and people get really excited about it. Yeah. And it's just like, it's going to help out a little bit, but it's really not that crazy. So like there's a lot of hype about it. And
And also
Justin again likes to take credit for it. And it's like, dude, nothing's helping.
Yeah. And if you're in the industry, both real estate, mortgage broker, please don't post a picture saying interest rates dropped to 3.25%. That gives zero context. Most people don't know
what does that even mean?
Yeah. I kid you not, about 7 or 8 people reach out to me being like, hey, I know we're closing in a week or, a month here, but can I get the 3.25%? I was like, no, that's what a Scotiabank lends their money at.
Yeah, exactly.
not a Dillan or Kurtis in Lethbridge, Alberta. They don't get the same, perks, right?
And they're like, oh, is it 4.5 or 4.29?
Yeah.
So, yeah. Thanks for coming on. We should do this again.
Yeah, thanks for having me.
Thank you guys so much for watching. If you guys want to see more videos like this, be sure to subscribe, hit the like button. Dylan also has a YouTube channel now as well, so I'll link that down below. You should go watch his videos if you want to learn more about the very exciting world of mortgage brokering. And we'll see you guys in the next one.
Thanks, guys.
Thanks for coming on.